Hello, we are still in chapter 24, managerial accounting, responsibility centers. Today we're going to talk about revenue center. Responsibility center is a functional entity within a business that has its own goals and objectives, and it's used to give managers specific responsibility for revenues generated, expenses incurred, and or funds invested. So today we're going to talk about in this video I'm going to talk about revenue center. So the manager's responsibility is to generate revenues, so he's going to compare his actual revenues to budgeted ones. The accountant for a subunit of Axel Sports Company went on vacation before completing the subunit's monthly responsibility report. This is as far as she got. Okay, so we have Axel subunit X revenue by product. Okay, so here he's talking about only revenues for multiple products, for more than one product. So for question 2 or requirement 2, what type of responsibility center is this subunit? Since all of them are revenues, it's going to be a revenue center. Okay. Requirement 1, complete the responsibility report for this subunit. Okay. So here we have actual results, we have flexible budget, and we have static budget. Okay. The difference between actual and flexible budget column, we call it flexible budget variance. So this is the difference. And the difference between flexible budget and static budget, we call it sales volume variance. Again, this is the difference between these two. This is the performance report that we took in chapter 23. So for the first one, actual results is 3 to 3,000. Then the variance is missing, the flexible budget is missing, the sales volume variance is given, and the static budget is given. So I cannot solve A before B. I need to find B first. Okay? Now, the difference between B and 298,000 is 20,000 favorable. Again, this is revenue. So if I expected an amount and I got a greater amount, so if I expected to get, for example, 5,000 revenues and I get 7,000, so it's going to be favorable. But if I expected to get 7,000 but I got 5,000, it's going to be unfavorable variance. Okay, so when he says that it's favorable, it means that the 298 here was less than the flexible budget. So this number is greater than 298 by 20,000, the difference. So what shall I do to find the flexible budget? I'm gonna add 298 to 20. It's gonna be 318. So this is the answer for B. Now the difference between actual and flexible budget, it's A. So 323 less 318, it's gonna be 5,000. So here the difference is 5,000. Now is it favorable or unfavorable? The budgeted one is 318 and the actual one is 323, which is greater. So it's gonna be favorable variance. Let's go to the second line. Okay, to solve for C, I need to find the difference between 152 and 164. It's gonna be 12,000. Okay, I expected to get 164, I got 152. I got a lower amount. Okay, so it's gonna be unfavorable variance. D, I expected to get 147, I got 164. So the difference is 17,000. I expected 147, I got more, I got 164. So it's gonna be favorable variance. Let's go to the third line. Okay, let's solve for E. I expected to get 300, I got 282. I got a lower amount, so it's gonna be unfavorable. 282 less 300, it's gonna be 18,000. Again, there is no positive, no negative. It's favorable or unfavorable. Now let's go to the fourth line, or to the fourth row. I expected to get 248, I got 253. So the difference is 5,000. Is it favorable or unfavorable? I expected 248, I got more, I got 253. So it's gonna be favorable. Let's go to the fifth row. G. Now, G less 426 equals 4,000 favorable. If it's favorable, it means that the actual was greater than the budgeted, which is G by 4,000. So G was lower than 426 by 4. So I need to subtract 4 from the 426. So it's going to be 422. Now the difference between 422 and 405 is 17,000. Is it favorable or unfavorable? I expected to get 405, I got 422, I got more, so it's gonna be favorable. Okay, now I, J, and K. For J, I'm gonna add the column, I'm gonna add all the revenues for the flexible budget. So 318 plus 164 plus 282 plus 248 plus 422. It's 1,434,000. Now the difference between the flexible budget and the actual, which is 1,435, it's 1,000. Is it favorable or unfavorable? I expected to get 1,434, I got 1,435. I got more, so it's favorable. Now for K, I expected to get 1,414,500, but I got 1,434. So the difference is 19,500. 1,434 is greater, so it's gonna be favorable variance. So we are done with requirement 1 and requirement 2. Requirement number 3, which items should be investigated if part of management decision criteria is to investigate all variances exceeding 10,000. So let's look at the variances. So we're going to look at this column and at this column. So here we have 12,000 unfavorable. Here we have 20 favorable, 17, 18, 16,500 and 17,000. So for the flexible budget variance, we need to investigate only the second product, which is downhill, R2. Well, for the sales volume variances, we're going to investigate all the products because all of the variances exceed 10,000. Thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.